Welcome back to episode 6 of the weekly analysis covering Euro USD from higher time frame to lower time frame. My name is Luke Burton from Not Just a Trade, and today we're going to go over the markets that we've seen for the past week and project next week based on what we've got now. Just a quick reminder, our public Discord is now open. You can join using the link in the description of this video. Let's get into the video. So weekly chart here on Euro USD. So last week I was saying that we've had 3 doji candles, so it's very likely we're going to start to initiate now, and this is just basic price delivery. After a sideways range comes an initiation, and sideways ranges are represented as these small doji candles that you see in these last 3 weeks. So we expected that we might see a move moving into next week, and that's exactly what we've seen this week. We saw an aggressive move back out. We've mitigated back out of this buy to sell wick here, and that can carry new intention in the market. So let's go down to the lower time frames. The daily chart now, we were here last week at this second candle here, and I said that we've mitigated now out of this sideways range that initiated and broke structure, showing intention to the upside. This first reaction that we got out of the range was to mitigate out of the sideways range that we had here. So we got range, initiation, mitigation, continuation, fulfilled that price delivery and took out the low. Then we saw another reaction back out this buy order here at the edge here. That initiated higher and that mitigated out of this range, initiation, mitigation, continuation, fulfilled that price delivery. Then we started to see that real move, the aggression and speed in the market to the upside. So I was looking for some continuations to take out this swing high. This high here is created at a low price on a higher time frame. So it's very likely that highs and lows that are created at high or low prices following an intention, which we have built here, is now just going to become liquidity for price, and that's exactly what it became. So we was looking for buy continuations at the start of the week, and we got involved in some of those buy continuations. So let's go down to the lower time frame, 4 hour. So 4 hour chart, just moving into the week now, we can see that Monday, obviously we were looking for continuations. We got sideways range, initiation, mitigation, continuation. Same thing here, sideways range, initiation, mitigation, continuation. This was a nice continuation here, obviously happened outside the session overall, but we saw a strong rejection of lower prices. We saw initiation to the upside, and that was range and initiation to the upside here. Now, some people were looking here at the edge and thinking about range, initiation, mitigation, continuation. Now, it's not wrong to think that you can play range, initiation, mitigation, continuation out of this area. You just have to understand why you're playing it. You're playing it in the middle of a higher time frame range, a high that's created at a low price, and the intention's been built after this low's been taken out. We've mitigated the buy order here on the daily. So if that intention follows through, this high is the first target for price. So that's why I was only looking for buys. There was no sells for me here based on all the things that I've just said. So I was only looking for those continuations. So let's go dive in deeper. 1 hour. Remember, when we're going through these time frames, all we're doing is just zooming in and out. You know, the time frames that we're going down on or going up and down on now, these are just zooming in and out of price. There is no rigid 1 hour this, 4 hour this, so on and so on. All I'm doing is zooming in on the same price delivery and getting a new perspective on the same price delivery. So as we can see here in the market, we got a structure break and we saw A to B created in the market. Price pulled back into where? The wicks, the range between the candles before price initiated to the upside. Now, someone asked me a question about this last week, if I could go over it. So the range between the candles, you have to understand the logic of a range first. The sideways range is a price contained between the low and the high. And this is what BFIs use to stack orders into the market. So when I'm learning to read candles here, when we get candles like this with a wick low, and then we get a continuation higher, something like this in the market, this is a high and this is a low in the market here and here before price is initiated higher, which is the second part of price delivery. So what we've seen in the candles is this range and initiation. So as you can see, this is a high, the high that we have here, and this is a low. This is where price was contained between this high and this low before we broke out to the upside. So that is a range on a lower time frame here between the candles. So that's why we're looking here. We're also looking here because it's at a good buy low location in this continuation of this trend. So let's draw that on. So you can see range between the candles, like so, before price initiated to the upside. And that is just understanding the price delivery. Range, initiation, mitigation, continuation of higher prices. So you can see at 8 o'clock, we got that mitigation. We got a strong rejection of lower prices that carried intention of higher prices. And the first 3 London sessions that we got this week were all moves to the upside. They all pretty much followed the same narrative of a move at 8 o'clock for a continuation to the upside. And we saw a lot of aggression and speed coming out of London session, which created those first moves of the day. So again, range, initiation, mitigation, continuation to the upside, new range created. And the first half of the week, we saw in New York session just a sideways range. And that's typical after we see a move in London. Price will then start to slow down towards the end of the day and just create a sideways range. And remember what sort of structure that we're in the market. We're in initiation structure. So we expect that the price is just going to create new ranges, continue, new ranges, continue. And that's exactly what we saw. So if you haven't seen that video, the market structure video, this explains this sort of price delivery. I'll put a link up in the right now, so you can go and watch that after this. But this is the same sort of price delivery that we saw from that video. It's initiation structure in the market. There is not only just ranges, there's also trends and there's initiation structure. And we expect at a point of mitigation where we can see that continuation, which is initiation structure, that we're going to see this sort of price delivery. And that's exactly what we saw. And that's why I was looking for buy continuations this week. So let's get down to the 15-minute. So 15-minute, these are our intraday timeframes, of course. We can see that sideways range now printed, initiation, structure break, mitigation, continuation. We also got a weak high here, which also then becomes liquidity to target to the upside, and that was created over Asia session. Then we saw continuation to the upside here, and we saw in trading. Then we saw continuation here to the upside, and price just started moving sideways for the rest of the session. I was in this buy here at this low at the bottom of this wick, but again, just took me out for break even and didn't end up going to continue. So started a week, I know it's normally quite slow for me overall, just with my strategy. So Monday, that was that, pretty much finished. Tuesday, again, we saw the same, exactly the same move. We broke out of the swing high. We saw an initiation to the upside. Price again started moving sideways. And here I got into another buy in New York, saw it price move into 12% and then ended up taking me out for break even. So for me, just personally, I was expecting that price was going to see a continuation of the momentum that we're currently seeing now. So I wanted to hold for a 1 to 15. Ended up taking me out for a break even on that one, which is fine. Price then saw continuation, again, range between the candles, followed by an initiation that we see here. Sideways range, initiation, mitigation, continuation, and targeted this high for continuation. So again, the same price delivery that we always see in the markets, RAMC continuation. So then Wednesday, now we're moving into Wednesday. We had FOMC on Wednesday. So typically, and we had an interest rate decision and FOMC at exactly the same time. So these are 2 monster red news events where we expect just explosions in the market. So even though I came into the session understanding that we're still moving into higher prices now and seeing a continuation of higher prices, and this range that we've created here is for that continuation of higher prices, because my narrative is bullish at this time. Price hasn't showed me any reason not to be bullish at this time. We haven't got any reversal structure. We are creating liquidity here, but intention is more important than liquidity, and intention is range, initiation, mitigation, continuation. That is bullish order flow that continues to move price higher or lower following that intention. So now we move into the session. I got involved in this trade here for a continuation to the upside. I ended up taking profit at 5R for this one. It was just like 5.6 on this one. Normally my TP is 1 to 10, but I said that if price doesn't hit TP, moving an hour before we see FOMC and interest rate decision, then I'll close it, because this move here happened instantly. So if I was on the wrong side of this move, we could have been way down here, and obviously because our stops are quite small here, that could obviously become quite a massive loss. So for me, in my playbook, it says close these trades 1 hour before the news event, and that meant that I took 5% from that day. Again, great trades, great overall understanding of the market. And then we saw an explosion to the upside. So price then created new structure in the market, and this is that reversal structure in the market where we get a high, low, higher high, we create that new low, lower high, and then see a continuation back to the downside. So we created this structure. Now, price creates this structure all the time. What's significant about this structure is it's created at a higher time frame point of mitigation. Now, this is a fractal high in the market, which means this is a high on multiple time frames. Fractal highs are higher time frame highs. So we expect higher time frame highs to be created at higher time frame mitigations. So when we're seeing that sort of price delivery in the market where we get those fractal highs at those higher time frame mitigations, at sell high continuation locations, this is perfect opportunities to then start changing your narrative, because price is showing you that the narrative is changing. So that's where I was looking for continuation in New York. So we took out the swing high here. We saw intention to the downside. And again, we're looking at that same price delivery that we always look at. Sideways range here, created, initiation, pullback, mitigation, and continuation into the low. So I got involved in this as a continuation to the downside here in New York. Intention was shown to the downside, pullback, and continuation to the downside. And again, that one hit 1 to 10, no news during that session. And obviously we saw continuation to the downside. Now just zoom out and just look at price. This is obviously reacting out of a sideways range that we have here as well. A previous range where we was in initiation structure to the downside. And I said in that video, when we get initiation structure, that was the structure video, when we get initiation structure in the market, price will create new ranges, and these will become reaction points that we can play with intention into the future. So now moving back over to the right, this is the intention that we're seeing. So it's not just about jumping on and saying, cool, I'm only selling here. You know, what are we seeing? We got the fractal high, we got bearish order flow out of this point of mitigation, we took out the swing high, we brought new intention into the market to the downside, and then we played that continuation. So we stacked odds in our favor. So it wasn't just a point of mitigation. We're reading the price delivery, we're building the story, we're understanding where price wants to go, what it's showing us, and we're playing alongside that intention on the lower time frames. So again, that was a really nice trade, ended up hitting a 1 to 10. And then what sort of structure did we move into? Well, we started exploding to the downside, range, initiation, range, and initiation. So now this is a higher time frame initiation structure to the downside. So at that point, obviously moving into London session, there were some really nice sell continuations here in London. I know a lot of the NJT traders got involved in these trades for continuations and hit take profit really, really quickly for their 1 to 10s. Then we took out the liquidity that we had here to the left, these relative equal lows. Remember, these lows here are only now important because the intention is lower prices. At the point that these were created, the intention was higher prices. So that's why liquidity wasn't taken at that point. It's being used now to follow intentions of lower prices. And then we mitigated out of sideways range again. Sideways range in an initiation structure previous, that becomes a future mitigation point. So again, all we want to do is go down to the lower timeframes at these points and see what sort of confluence that we have to see a move into higher prices. And we're going to use the concepts and understanding to get involved in these moves. So again, we're at low prices overall. We've seen that London's had a very strong move to the downside. Prices at low prices here between this A to B. This is your premium, this is your discount, this is your edges at the highs and the lows. So we saw here a strong rejection of lower prices at a point of mitigation. We saw intention being shown in the market because we got a breaker structure on the lower time frame. We got that pullback and continuation to the upside. And I'll just go down to the minute chart now. This was the last session of the week. So just zooming out on the minute chart, again, that's that strong rejection of lower prices, intention being shown because we broke structure there to the upside. We got that pullback, second higher low, broke structure there to the upside again. And then what sort of price delivery did we see? Well, we mitigated out of this sideways range that we had to the left. Again, this is a range between the candles. I'm pretty sure it's on a 5 minute. We saw intention being created to the downside because we broke structure and we got range, initiation, mitigation, continuation. But what was it creating? This is what was important. We were creating liquidity to target to the upside. Now, at this point, prices contain sideways. So we are at low prices on the higher time frame. We've got range, initiation, mitigation, continuation in play. We're at low prices in this whole sideways range that prices created on the minute chart. We've got a sell to buy that's initiated with aggression and speed to the upside, and price is moving sideways. So it means they're stacking orders at this point of mitigation here inside the sideways range. So this was my buy opportunity to get involved in this move, and this went on to hit 1 to 10. And as we can see, that's when intention takes liquidity, because now the intention is created for higher prices. We're at that point of mitigation. We see momentum shifting into bullish structure now, bullish order flow in the market. And again, the same thing, we're getting initiation structure now. So if we're at a point of mitigation, we're expecting that we're going to start to see that aggression and speed, new range continuation, new range continuation, new range continuation in the market. We're getting that bullish order flow in the market and that aggression and speed to the upside. So at that point, it was very obvious that price was going to come and take this high. And then my TP was just before this range here at the edge, which was perfect for me because I knew that we'd start to see a reaction out of this range at the edge because this is a sell high inside the sideways range. So that was the whole week on Euro USD, a pretty insane week. We just saw a move up and a move right back down into obviously the middle of the range. So that's a pretty insane week on Euro USD. A lot of great opportunities in my session to take some buy continuations to the upside. When intention changed, so did my understanding of what price was doing and where it wanted to go, and I got involved in those continuations. Now, there's so many opportunities to get involved in these moves, whether you trade only London, whether you trade only New York, whether you've got only 1 hour a day to trade. Today I only traded 1 hour. Yesterday I was at the charts for 2 hours. The day before that I only traded for 5 minutes because my trade came right at the start of the session. Day before that, again my trade came deeper into the session, so I was at the session for a 2 hour point, and then Monday was a 2 hour session as well. So you can see over the week I'm not applying that much time to the charts, but I'm getting into the right intention because my processes that I have that you can learn at NJT allow me to get into these intentions, buying low, selling high, trading with the RIMC concept, and getting involved in great trades week in, week out. So what's next for EU? Let's go up to the higher time frame. Now on the 1 hour chart, we can see if we just zoom out at price right now is overall sideways, and we're reacting out of sell high locations, and we've moved right back into this range here now. There's a lot of liquidity that's been built up in this move in all of these lows. These are all stacked lows here, which could become liquidity if the intention is to see lower prices and target this low. So that's what I'll be looking for at the start of the week. If price is showing continuation of this bearish momentum that we've seen at the end of the week here, then I'll be trading alongside this momentum and seeing continuations to the downside. It's probably likely that we'll just start to create a sideways range here because we're at the middle of the range, and then I'll see the intention for the day. Now, if this intention follows through here, created in this range, initiation, mitigation, then the intention is going to target this high for continuation. And as I said last week, we build our narratives from a day-to-day basis, from the 15-minute chart when we get into the session, so we can understand when price is changing at its earliest point and then get involved in those moves for continuation. So again, we're either going to target this high for continuation, or we might see this momentum continue into the downside. Now, don't try and catch the bottom or top of this move. Wait for intention to show itself. So if you're looking for buy continuations and you want to play this range, for example, wait for price to get into here, wait for range initiation, play that mitigation continuation to the upside, or wait for price to create a range, show some aggression and speed, a new range, and then play continuation to the upside as well. There's no need to try and catch the high or low in the market. It is pointless to try and do that. And using our concepts, you don't need to do that as well. Thank you all for watching. If you want to find out how we trade these markets with precision, visit our website at notjusttotrade.com. You can also follow us on Instagram at notjusttotrade. Our public Discord is now open. Join through the link in the description of this video, and I hope you all have a nice weekend and are ready to get started for next week.